What is going on, everyone? Welcome back to another Astronomics Daily. Hope you're well. Today is Friday the 13th. Yes, Friday the 13th. Funny day for me. Obviously had some experiences in the past on Friday the 13th, which always rings a bell. But I hope everyone is well. I hope you've all had a very, very good week. And yes, Fridays are notoriously known for risk-off moves in the markets. So is that something that we're going to get today? Possibly. With the whole narrative at hand, nothing's really changed. However, into today's London session, we have had a lift in risk, broad risk, be that equities, commodities, cryptos, everything is trading higher. Is that just a bit of a relief bounce? Is that people, or are people just taking profit, right? Is it just a bit of a relief rally because people are capitalizing on this capitulation? Now, if you don't know what a capitulation is, that is a massive selling in the markets where they have sort of like a V-shaped bottom purely because loads of sellers, everyone taking profit, the market slightly lifts off the back of that as well. Now, just recapping, yesterday we had US PPIs, that's producer price index, that is producer inflation. Now we had a print over 10% year on year. Year over year, 10% increase in the cost of goods and services to the average producer. Now think about that for a second. If the average cost to the consumer right now is roughly around 8.5. You've got PPIs, which is forward-looking and slightly ahead of consumer inflation for two reasons, right? Where are they getting their goods from to provide a possible service to that consumer? So you got, if PPIs are at 10%, right? You want to look at where that producer is getting his stuff from. Okay, could be China, right? China's possibly slowing down right now. Then you got that inflation that's transferred to the consumer, which is at 8.5%. Guess what? You got roughly around 1.5 to 2% gap in between the producer and the consumer. So what's going to happen? That's still going to catch up to the consumer, right? It's the main reason why all over the headlines, people are calling, or economists are calling for double-digit inflation to the average consumer later this year in the States. Hence, obviously, the possible recession that could come thereafter. Why? Think about that. If China supplies certain goods or raw materials to the producer in America, which provides a product or service to a consumer in the States or globally, wherever that comes from, we need to think about this as a global supply and demand sort of chain. Now, if you just think about that for a second, what are the drawbacks from that, right? Two, you're going to have, or one out of the two, you're going to have higher consumer inflation, which is just going to ruin the average American household, right? Then you also got that lagging effect. Once America stops, or once America slows down, growth starts to shrink, possible recession comes from that. What's going to happen to the global ecosystem, right? We already know what's happening in China. We already know the United States lags China by 9 to 12 months, right? Cyclically. 9 to 12 months, 3 to 4 quarters, America is lagging behind the Chinese economy, right? When they entered their first COVID lockdown in March 2020, right? All the way to where we are now, the US is lagging, right? They had high inflation, they had slow growth. The US have high inflation, we're entering the slow growth period. And that's almost like 9 months later, right? Almost a year later. So think about that for a second. US PPIs, major thing. This obviously shows us that, yes, the Federal Reserve, and that comes down to my third point, recession signs of warning. They're all over the place, right? Everyone's screaming recession. And usually that's when the market bottoms, the equity market bottoms. Why? The Federal Reserve will have to pivot, right? The Fed will have to pivot from all this optimism, and they'll have to, in the next 12 to 18, I'd possibly say 18 to 24 months, the Federal Reserve in America will be doing QE again. So that's stimulating the economy. Dollar will crash, equities will rise, risk assets will rise, cryptos will rise. But that's in the span of the next 12 to 18, possibly 24 months from where we are right now. Remember, China's leading by 12 months. We need to look at where we are. Fine, the Fed are tightening right now, but where we're going to be by looking at these PPI figures. Now, After PPIs, I know this may seem like a lot for you, but please pause this video right now and write down everything that I'm saying. After PPIs, we're looking at ISM, right? We're looking at ISM manufacturing PMIs. So you're looking at producer inflation, then you're looking at your ISM manufacturing PMIs, right? To show you what's happening in that sector, within the sectors, right? You can look at services and so forth. That ISM is so important. Every time in history, in the States, if that ISM crosses below 45 on the index, the US head into a recession, right? We're already heading in that direction. We're already heading in that direction because inflation is too high. People are spending less. That's affecting the producer because if people are spending less and buying less, that producer is not going to be making as much money. They're going to have to let staff go. And it's just a knock-on effect. I'm sure everyone gets the picture, right? So after PPIs, I'm looking at ISM manufacturing PMIs, and that is giving me those recession warning signs, right? So think about that for a second. And why am I so passionate about this? Because equities are going to reach a bottom. Cryptos are going to reach a bottom. That is opportunity for us, right? That's opportunity for us. We've short the market, right? I gave the warning signs on the US 30, on the Dow, on the S&P, BTC, XRP, ETH, right? We caught that short. Now we need to think about, fine, let's capitalize on FX, make some money, and we know where we put it in straight away. We know China is leading the States by 12 months. That gives you 9 to 12 months to pretty much sort your shit out and get ready for the next bottom, right? A recession scares a lot of people, but it damn well excites me and it should excite you too. So we need to now use the information that we have to capitalize, as easy as that, right? Will the Federal Reserve still hike 8 times? Doubt it, right? I doubt it. The Fed are looking at inflation. Inflation's lagging, it's rear view. If we look at what's happening in China, and we know that China is leading America, if growth has already started to slow down in America, the Federal Reserve won't be able to hike 8 times. Not a chance, right? Not a chance. What will that do for dollar? What will that do for equities? What will that do for cryptos? What will that do for risk as a basket in general, right? Think about that for a second. As I mentioned, you got your producer inflation, consumer inflation, you got your PMIs that you're looking at as well. Naturally, you're looking at GDP, sort of like a forecast of growth, but as a precursor, we're looking at those PMIs, we're looking at that producer inflation before we look at consumer inflation too. So I doubt the Federal Reserve will hike 8 times, but guys and girls, that's so exciting, right? Once that happens, euro dollar is going to hit a bottom. Cable will hit a bottom, right? Cable's GBP USD, just in case you don't know. Equities will hit a bottom, right? Dollar CAD will hit a top. Exciting times, right? Exciting times. So if you've missed this dollar rally, not to worry, right? Everything that goes up must come down, right? It's quite funny that. But think about that, right? If you've missed these rallies now, don't worry about it. Don't worry about it. There's equal but even bigger moves yet to come. So please just keep that in mind. Currently, day 75 of the Russian-Ukraine war. Nothing's really changed there in terms of attacks and retaliation on the ground. They are still fighting. As far as I'm aware, my only source that I'm listening to right now is the Kiev Independent, as I have mentioned, east or west, they write their own news, which benefits them, right? It makes sense. Whatever benefits them, whatever moves their markets, they're going to be inclined to write on that news. However, the Kiev Independent, right in the ground, right in the middle, obviously stating the facts of what's happening. As far as I'm aware, Russia have suffered great losses in terms of their attack on Ukraine. I'm pretty sure they didn't expect such a big comeback or such a big retaliative force from Ukraine. But there again, that's put Russia on the back foot. In terms of sanctions, I've obviously seen oil is where it is because of the sanctions, right? $106 a barrel. We have been playing ping pong with that out of that 108, 109 region, purely because we understand the supply and demand disruptions of the sanctions on Russia have been filled with oil supply from other regions, right? That being said, hence the move in dollar CAD. We've got dollar CAD back at 130, 1.3. It's really good to see, right? Really good to see. Possible trade setups. Let's run through this. Let's run through the dollar first of all. We've obviously closed back above that level on the daily time frame, which is really interesting to see. As I did mention, I had an upper level and I had a lower target to obviously look at. But as I mentioned, guys and girls, we are where we are because of the situations at hand. What are the situations at hand, right? You have China putting strict lockdown measures on Beijing and Shanghai with the talks of further disruptions on the likes of buses, public transport, metros, and so forth. That's restricting that Chinese economy. If China's lagging the US, we're in trouble, right? We're in trouble in terms of recession. But us traders, we know what we're doing. We can capitalize, right? Generational wealth, by definition, comes from these peaks and these troughs in recessions, right? So if you are where you are, doesn't matter what you've been through, sort your shit out in the next 6 to 9 months, and you have the perfect opportunity, right? Recession equals opportunity, so use that to your advantage. Dollar, we are where we are for several reasons. We obviously had this rally, right? You got the Russia-Ukraine war, you've got China going into lockdown, you got the Federal Reserve tightening their policy, raising interest rates. Multiple reasons, right? And think about that for a second. As I mentioned yesterday, you had that capitulation in the crypto market, driving risk in FX and equities, right? All over Bloomberg, all over CNBC, warning signs about a UST depegging causing unstable markets. Why? It's rattled risk. Over $200 billion was wiped out the cryptocurrency market in 24 hours, one day, right? Think about that. 200 billion. Of course, that's going to wobble other markets, right? People are going to flee into dollars, real fiat dollars, right? So hence that move that we've had. I'd like everyone to write down the 3-4 current narratives that we have. We have the Federal Reserve raising interest rates and tightening their policy, right, to combat inflation. Employment in America is the highest it's been in years, right? You obviously have the war in Ukraine, you have the lockdown in China, then you have this UST Terra Luna bubble that's been popped, right? Those are the 4 narratives. Those are the 4 market plays right now happening in front of us. We want to look at them and decide if or derive if those 4 change, then we obviously need to adjust our view in the markets as well. So dollar, where it is, 104.50, major level. We know that the last time it was at these levels was 20 years ago, right? Back in 2002. So it's very interesting, very good to see right now. Gold, flash crash into the lows this morning of 1810, which was insane to see. But as I mentioned, we've had this capitulation across risk, broad sell-off in terms of the S&P as well, right? Hitting 3850. The S&P, by technical definition, yesterday evening went into a bear market. Bear market is signaled by 20% off of the high that it printed. So if we just go ahead and measure that from the high to the low, I actually measured it. We went into a 24.7% decline from the high. We know we've been short, guys and girls. It's been a great short. I took most of my profits around the 4,300 region, but I'm glad this trade came through for everyone. But yesterday, for the first time, we entered into a technical bear market on the S&P. So possibly we could expect, if I had to, look at this bit of relief that we've having in the markets right now. We've seen 1, 2, could we possibly have that third drive? I'm going to show you something that happened in 2008. Right? Don't know why that's so big. Anyways, can't make it smaller. That's all right. We had 1, 2, 3 drives into the high. We broke that neckline. We had that lower swing high. We had the initial capitulation. We had the correction before the continuation. Now, oh man, I love this stuff. I honestly do. Look where we are right now. Man, oh man. Amazing. Beautiful. 1, 2, 3. We had that break. We had that right shoulder. Beautiful fib from the high to the low, right? Came into that 61.8 and that 78.6 golden area. Perfect. Hit that target. What do we know? It's not rocket science, right? We're going to get that correction to that 4,300 region easily, right? I'm personally short any rallies, right? Any rallies we have, I'm short. Worst case scenario, we come back and just retest this 4,200 4,200 to 4,150 region, the same way we did over here. Same way we retest that. It's the same way. You find where we are. Yeah, there we go. The same way we're going to have a bit of a relief, right? A bit of a relief, retesting that for 150. I don't know if anyone remembers this, the PPT, the plunge protection team. I've obviously spoken about this tons of times. We know that they like to step in scenarios like this whenever the market creates a new bottom. We obviously had that new low right now, expect a bit of a relief, right? Markets have already priced in what they had to price in. So expect a bit of a relief, but I'm personally short on any risk rallies, right? Obviously, euro hitting 104 is a major level, right? Major level. We need to look at this. We've had wicks there before, right? I'm personally not short into this level. I'm not short into this level. I understand. And as I have had word from several of my sources, Chinese pension funds love cheap euros, right? Cyclically, if they come in out of their little period of lockdown and slowdown right now, and they want to start investing again, what are they going to buy, right? What are they going to buy? Dollar's way too high. What do you buy? Oh, I like that. Dollar's way too high. What do you buy? Pounds and euros, right? Pounds and euros. We understand that. We know that. It's basic. But we want to use that subconsciously when we're actually trading FX. Obviously, your yen crosses yesterday, massive slide to the downside, right? Capitulating, we understand. We were short from the highs. It would have been a great if we held it. Let's actually measure that from that initial position. Would have been 1,000 pip trade. I didn't hold. It's okay. As I have mentioned tons of times, you want to basically have a risk management model. Whatever the market does after that, you don't care, right? You need to manage your losses. Your winners will take care of themselves. As long as you have a profitable risk management approach, you're laughing, right? You're laughing. Now, in terms of cryptos, we had a bit of a bounce abroad, a bit of a bounce there too. Guys and girls, that fib target, I couldn't have drawn it any better myself. I mean, look at that. A, B, C, D, perfect. XRP. Yeah, again, same fib. We had that on there. Beautiful, reaching to that target. I personally still expect a further capitulation. The narrative hasn't changed, right? Hasn't changed. This is just a bit of a relief rally. People taking profits. That's all it is. But I'm going to leave you on that note. I'm going to drop some screenshots of what I feel could happen today. I may personally not be involved in the market. It is Friday the 13th. And yeah, probably going to just have a chill day in terms of actively entering positions. Should there be any trade setups, I'll drop them in the group. But I hope everyone has a great day, great weekend. And if you like today's video, let me know. And we'll catch up possibly the weekend. If not the weekend, Monday. Hope everyone has a great weekend. I'll see you all then. Take care. Bye-bye.